Good morning, ladies and gentlemen. Good afternoon, apologies. We're here looking at another live analysis session where we're going to be looking at key setups for today's PCE price index release. So we're going to be looking at what the current indications are, what currently technical analysis is indicating, potential trade setups as well with key entry levels, potential full round setup levels. So today we've got a very important announcement, and it's even become more important than what we previously were expecting, because of course the Core PCE Price Index, which is basically the most preferred measurement of inflation. The Core PCE Price Index has always been the most favored by the Federal Reserve in terms of what is actually causing inflation, where inflation currently is at, and if there's an upward or downward pressure on inflation. It's their favored index in terms of that overall analysis. So it's always been important. Every single month, of course, is important, but it has become even more important, about to create potentially even more volatility than it has in the previous months. Why? Because this month we of course had the Federal Reserve's interest rate decision. They decided to cut. That's not having any effect at the moment because it's already priced into the market. But they left the door open to both one interest rate cut in October or for two interest rate cuts, one in October and also one in December as well. Now, they told us that it's massively going to be dependent on the data which is about to be released. Now, in order to get a clear indication that the Federal Reserve and the Federal Open Market Committee are going to opt for two consecutive interest rate cuts, then of course we need pressure in terms of economic pressure, negative data from employment data as well. And of course, we want inflation at the very worst to stay at its current level, or ideally for inflation to decline lower. Now, if we're going to get that outcome, then of course, gold is likely to increase. If we're going to follow the traditional economic consequences for the rest of the market, gold tends to see a higher price. The stock market, specifically the NASDAQ and S&P 500, tend to see a higher price as well. That would also be great because we're also about to enter earnings season in approximately 2 weeks. But the issue that we've had is yesterday's data was extremely positive. We did not get that really negative employment data. We didn't get negative economic data either. New home sales, pending home sales as well, they all came in much higher than expected. Durable goods orders came in significantly higher than expected. We were actually expecting that index to decline. It increased by almost 3%, which is deemed to be very high. So economic activity within the market, based on what we saw yesterday, is not under any pressure in any way, shape, or form. The gross domestic product came in, instead of 3.3%, it came in at 3.9%. Weekly employment claims was at the lowest it has been since July as well. So it gave us a very different picture that the economy is stable, there is economic activity, there is economic growth, growth isn't slowing. So there's no pressure based on what we saw yesterday on the Federal Reserve to actually say, we need support in the economy, regardless of the fact inflation is too high. We need support within the economy, within the employment sector. So cut interest rates. Whereas now, if we keep getting positive economic data, it's actually saying to them, do not cut interest rates. There's no need for it. It's better to concentrate the monetary policy and that specific method to bring down inflation lower. So that has made today's announcement very, very important, likely going to create a lot of pressure, because what economists are actually saying is that the core PCE price index, let's say inflation, the PCE inflation rate, is going to come in less than what was previously seen in the previous months. On average, in the previous months, we've seen 0.3%. Today, in a few minutes' time, we're expecting it to decline to 0.2%. That means on a yearly basis, inflation will remain at 2.9% in terms of the PCE inflation rate. Now, if it comes in less than that, then it actually is indicating that economic growth and demand isn't as high as what we may have thought yesterday. In addition to this, it also says inflation isn't a major issue, it's not a major risk to the economy, it's actually declining. So, because of this, we can be cautious in terms of the economy and decrease interest rate, make those adjustments. Because if they don't cut interest rates, while we're seeing especially employment data decline, then there's a massive risk there if they're not going to get that support. So if we, ladies and gentlemen, going to get lower data today, lower inflation data, specifically, okay, yes, we're looking at gold here. Gold can significantly increase in value. If we're looking at technical analysis in terms of gold, in the short term, it's getting a neutral indication, but in the medium to longer term, and we'll look at this together in a few moments' time, we're looking at an indication for further upward price movement. If the Core PCE Price Index comes in at, for example, 0.1% or 2.8%, then that can potentially support that scenario. But also a big asset for today, ladies and gentlemen, will definitely be the NASDAQ. It will definitely be the S&P 500 because that's trading at a significant discount now. If we're looking at the short term, if it's at a discount, we're at a better area to purchase. And yesterday, we got indications of very strong economic data, a better picture in terms of the employment sector as well. So if we're also going to get an indication that inflation is also declining, which supports consumer demand and sentiment, and we're going to get indeed 2 interest rate cuts, then there's a lot of economic data. There's no conflicting signals there. There's a lot of economic data which is signaling the potential increase and upward price movement for the NASDAQ, also for the S&P 500 as well. But if we get higher PCE price indexes, then in terms of the NASDAQ and in terms of gold, we're likely to see pressure, significant pressure on both of them. Whereas if we're going to look at the US dollar index, the US dollar index is likely to increase in value because of the domino effect the higher inflation rate will have on bond yields and also the consequence it will have for the Federal Reserve and the federal fund rate. So interest rates, let's say. So it's a very important announcement, ladies and gentlemen, very important announcement. Now let's start off with gold and look at what potential scenario we may be looking at in terms of gold. Now in terms of gold, if we're looking at the longer term price movement, we are getting an indication that the price is slightly overbought. If we're looking at this regression channel, because it's a Bollinger Band, but in a sense it's a regression channel, we're not in the bullish area. We're actually above the bullish area. We can see that we're above this line here, and we've gone onto the secondary regression channel here. So that tells us that there is a slight risk that the price of gold is overpriced. If it increases even further and we get a lot of volatility upwards, and we actually go into this area here, then there's a very strong indication that the price is overbought. In which case we may see a retracement, we may see a correction. That's something, of course, we can take into consideration. But at the moment, we do have a slight indication that it is overbought. But if we're looking at in terms of the 2-hour time frame, we are trading above both moving averages, which is something definitely positive. That gives us an indication that buyers are still controlling the market. We also have an indication on the stochastic oscillator. It's currently trading at the 72 mark. So that gives us a clear indication that, again, buyers are controlling the market. We have a crossover here, ladies and gentlemen. We're slightly above the 50 on the RSI, but that gives us a neutral signal. And so does the MACD as well. Now, if we're going to look at price action, we're actually partially getting a symmetrical triangle pattern, but at the same time, in the short term, we're getting an ascending triangle pattern. In terms of the ascending triangle pattern, in which case we're seeing higher lows, but the same high, more or less, then here we got an indication that we're again seeing a slight tilt towards the bullish side. Of course, technical analysis may become irrelevant because it's all going to depend on what's about to be released by the Core PCE Price Index. However, based on this analysis, there is And it's because of the bullish momentum that we have seen again and again and again. I mean, if we go back to the weekly time frame, we're looking at here of 6 consecutive weeks of gold increasing in value. So just over the past 6 weeks, ladies and gentlemen, gold increased by almost 14% just in 6 weeks, guys. So a lot of upward price movement. Now, the good thing about here, ladies and gentlemen, is that if we're going to look at the upper side of the ascending triangle, and we're going to look at it in terms of swing trade, so somebody looking to keep the trade open for 2, 3, 4, 5 days, for example, then if we're going to trade above this level, we have a clear indication of upward price movement. Ideally, we want lower a lower PCE price index, significantly lower, if we're going to get a bullish indication like this. Now, if we switch and we go onto a smaller time frame, for example, so let me go back to gold. If we look at gold here, again, you can really see that ascending triangle pattern. The highs more or less are consecutively at the same level. If we're looking at the lows, though, the lows are higher and higher on every single occasion. If we're looking at the 200 bar simple moving average, we're trading above it. So again, we have a very clear bias towards the upward price movement. Now, if we're looking at the shorter time frame, if we trade in and going to break above the average resistant level, because if we're looking at a resistant level, we have a resistant level here, slightly higher here, and we've got some higher levels here. If we're going to look at the average resistant level, which is approximately here, ladies and gentlemen, that will act as a breakout level. So if it breaks above that, then we have an indication to speculate upward price movement. Now, if we're going to get a lower PCE, if we're going to get a breakout here, like I've mentioned, you can open a pending order here. You can potentially open a market order as a price movement is happening. There's different options that we can, of course, take into consideration because there's going to be a lot of volatility. You need to be prepared for up and down volatility. Now, because of that volatility, when we do get this type of volatility, when timing is very difficult, there's 3 approaches that we can look at. We can either look at scaling in which case we can open further buy positions as the price declines, and we can also open further buy positions as the price continues to increase in value. So that's one option there. Another option is averaging down, which just basically looks at, we've got upward price movement. It is an upward trend, but each time it dips, I will buy in order to look at lower the average buy, which I'm entering at. And that gives us a better position, generally speaking, of course, as long as it continues to move upwards. The other option is, of course, you can look at pyramiding as well. Pyramiding is only opening further trades as the price continues to move into your favor, and you open slightly smaller trades on each occasion. So, for example, the first trade could be 1 lot, the second trade will be 0.75, the next trade half lot, the next trade after that a quarter of a lot, and so on and so forth. So that's a big factor as well. I've got some questions here. I'll very quickly answer some of these questions. So someone says here that he's going to look to sell gold. So very interesting. Let's look at some other questions here. Another one says to buy gold. Data from Bloomberg targets $4,000. Yes, we actually had a podcast about that, ladies and gentlemen. If you go to our YouTube channel, you'll be able to see a podcast when we're slightly talking about that. We also had an article approximately 2-3 weeks ago in regards to gold reaching $4,000. So that's definitely something we're going to look at as well. Now, this is gold, ladies and gentlemen. We've looked at our setup very quickly before the announcement is made. If we're going to get a decline, though, below the low here or below the 200 bar simple moving average, then we're going to look at potential sell trades. Now, let's see what the announcement is going to be. I'm going to share our calendar, ladies and gentlemen. Excuse me. So we've got our calendar here, and let's see what the announcement is going to be. Let's just give it a few seconds and we'll refresh. The announcement is going to be made in 5 seconds, 4 seconds, 3, 2, 1. The announcement just was made, ladies and gentlemen. So let's refresh very quickly to see what the announcement was. Let's go to today. and let's look at the announcement. So here we are. The Core PCE Price Index remained at 2.9%. It came in as expected at 0.2% as well. So it did come in lower than the previous months, ladies and gentlemen, but it did come in as expected. It didn't come in necessarily higher than expected or lower than expected. It came in as expected. So the inflation rate remained at 2.9%. So it didn't come in lower to give us real significant confidence that gold was going to increase in value or the NASDAQ was going to increase in value. But nonetheless, like we said from technical analysis, it has at least calmed down our nerves that inflation hasn't increased. And also, if we look at technical analysis, we still have a bullish bias in regards to that. So we had those levels that we were previously mentioning. Let's look at these levels. So the buy trades, so those are the ideal trades that we were looking at. Those have been triggered here. So we're already, based on the first trade, 0.08% in profit. So that's in regards to gold, ladies and gentlemen. Let's switch to the NASDAQ. Look at the NASDAQ's upward price movement. Like I said, guys, the NASDAQ was extremely lower. Real great place to enter buys because we were trading at a discount. Yesterday's economic data was significantly higher. Ideally, the NASDAQ would have liked to have seen inflation decline, to be honest. They would have preferred, rather than it remain at 2.9%, they would have preferred that it actually declined to 2.8%. Nonetheless, though, has calmed down some nerves. Actually, if we look at the NASDAQ, because we looked at gold, let's also look at the NASDAQ, guys. If we go to the NASDAQ here, we can see the NASDAQ was trading below both moving averages. Now, because we were trading below both moving averages, we need, in terms of the medium term, the NASDAQ to continue to increase and trade above both moving averages in order to get a clear indication that the price is going to continue to increase. A positive sign, though, is that on the stochastic oscillator, we crossed over upwards. We definitely have a bullish breakout as well. If we're looking at the RSI is at a neutral area of the market. The MACD, though, is still pointing towards downward price movement. Now, what you'll notice is a lot of time, whenever we retrace and go back to these lines, we go back to these levels, what actually happens is that it rebounds off these levels. Even, when we were getting this downward price movement and we came down to that trading cloud here, it did rebound at first. So even though we're getting this upward price movement, ladies and gentlemen, you still have to be cautious that at level, you're not going to get a retracement downwards, because that tends to be a level where the price tends to retrace at. Now, if we go to our regression channel here, the good sign is that we're not in a level which is overbought. We don't currently have an indication here that the price is overbought on a weekly time frame. If we go to a daily time frame, we were at a price that was overbought, and there was, of course, a lot of risk there, which is why the price also declined here, but we're not at that level anymore. Now, I've got some people here that says to look at the US dollar. Of course, we definitely will look at the US dollar. Let's actually look at the best performing currencies and worst performing currencies after this announcement. Now, if we're going to look at a daily basis, the best performing currency of the day so far is the pound and the euro and the Swiss franc. Okay. Worst performing currencies of the day are the US dollar, the Canadian dollar, Australian dollar, and New Zealand dollar. They're the worst performing currencies of the day. So, of course, if we're going to speculate that the US dollar is going to decline, there's benefits of doing so with the Euro USD or the USD Swiss franc, which are two currencies which are performing well at the moment. So if we go to, for example, a 5-minute time frame, we can see the NASDAQ still doing well, guys, as well. And we go to the Euro USD, we saw an upward spike, retraced back downwards. Nonetheless, we still saw that upward strike. We're still, ladies and gentlemen, there at the 200 bar simple moving average. As it's declined back to this moving average, traders may be looking to consider averaging down. I can show you, this is a good example of averaging down, actually, guys. If you purchased here because we were at a breakout, let's say, for example, it retraced. So a lot of traders will be thinking, that's not a great entry level. But if you open a buy, for example, here, okay, and we open a buy again here, then the average retracement, the average purchase price isn't this upper price here. This upper price and lower price we purchased at actually will give us an average purchase price here. So if you looked at the first purchase price, which was here, and looked at this chart, we would say it's not a great purchase price. Whereas if we look at the average, after averaging down, so opening further buy trades at a better buy position, then if we look at the average, and somebody said, what about this buy trade? Is this a better buy trade? Is this a good buy trade here? You'd be thinking, yeah, that's a great buy trade. Great buy trade. Uh, so this is why averaging down is very useful. This is exactly how a lot of professional traders use averaging down. It's in order, especially when you're in a bad position, it wasn't the greatest timing. Could have been the correct trade and correct trend, but the timing wasn't great. It was too high of a price. But opening more buy positions at a lower price, then actually what happens is the average purchase price that you have been purchasing at is much lower and is a much better entry level. So for those people that have been buying up here, because I've got some people here that are saying they're trading Forex, somebody says Euro USD here, somebody says USD JPY as well. If you've been purchasing up here, now that it's down here, do you want to take advantage of the discounted purchase price? That's of course something you can evaluate, analysis, and take into consideration. Somebody says here, buy or sell gold, sir. Let's go to gold again. Here we go. So the bias at the moment for gold is upward price movement. We have to be cautious, of course, of retracements. Both these buy positions have been triggered. I mean, if we're looking at short-term traders, so if we've got scalpers here that were entering at this buy position, by the way, they probably have hit their take profit. I mean, we're looking at a take profit of 0.10%. So any scalpers, they're already out of the market. But for those individuals that are not scalping, and we maybe have some day traders here, maybe some session traders here. If we're looking at swing traders, then ideally, we'd want to look at a slightly larger time frame, like this time frame here. This would also have been a great scenario when we're looking at an ascending triangle pattern and still having the bias of upward price movement. Averaging down is such a great methodology because it just keeps giving you a better and a better scenario as you're trading the buy and upward price movement at a better and a better price. Of course, that only works if indeed we are seeing a trend. Whereas pyramiding would be a better scenario for like this very clear trend scenario. That's mainly where we're looking at pyramiding. Also scaling in and scaling out, same scenario, better for trends. Whereas averaging down, more for ascending triangle patterns, descending symmetrical triangle patterns, range bound trading conditions as well. Nonetheless, guys, we've got a very clear indication that the price of gold is likely to increase in value. Of course, while we're looking at gold, it's very important also to simultaneously be looking at the US dollar index. So US dollar index is very high at the moment. Okay, it's declined today. Looking at up and down price movement since the announcement has been made. This is a 30-minute chart. If I'm going to be speculating that gold's going to be increasing value, ideally I want the US dollar to be declining below here. If you see both gold and the US dollar simultaneously increasing in value, then and that's something we also saw last Friday. We saw that on Monday as well. If you do see that, then one of the two has to give way. Both cannot continuously for a long period of time simultaneously increase again and again in value. One has to give way. One has to give way. So that's very, very important, guys, as well. Now, what indications can we get from fundamental analysis? Now, if we're looking at the price movement of the stock market, here we've got very clear indications of buy signals. based on fundamental analysis and indications. Now, if we look at the global stock market, here we've got, for example, the Euro Stoxx 50, the German DAX, the Dow Jones, S&P 500, NASDAQ, all of these all of these indices, even the Russell 2000, which is small cap companies, they're all increasing in value. The only one which is decreasing in value is the Nikkei 225. That's largely because of what was released earlier today in terms of the Tokyo Core CPI. So I wouldn't include that because that's fundamentally due to fundamental analysis of Japan itself. Whereas the global stock market all is increasing in value. If we're looking at the VIX index, which is an indication of risk, it's lower. So we know that the risk is lower. The risk sentiment is sentiment is increased. The risk itself, in terms of the indication from the VIX, is lower. So that's positive for upward price movement for the S&P 500, the Dow Jones, and also the NASDAQ. If we're looking at bond yields, ladies and gentlemen, let's go to bond yields. Look at these bond yields, guys. Most bond yields are trading lower. Here we've got different bond yields. We've got approximately 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bond yields. From those 13 bond yields, only 3 are trading higher. So bond yields are lower as well. That gives us another indication that the stock market is going to attempt a rebound. If they're going to be successful, of course, that's something we're going to continue to monitor and see if that materializes. But we have another indication there of upward price movement. If we're looking at here, the greed index is still is in neutral. To be honest, it's been in neutral for the whole week, still is in neutral. But what I want to look at is the high-low index. This is the high-low index. Currently lower, still generally speaking high. If we look at the year so far, we're still at a very high level. It's dipped. Ideally, we want that to start to increase in value. Okay, still very early. We still have 45 minutes until the US session opens. As the US session opens, I definitely want that to come in slightly higher. It's still at the greed indication, so indication of upward price movement. But again, that's a bullish bias. But in order for it to be short-term active, I wanted to start to point slightly upwards. Now, if we go down and we look at the put call options, which is basically looking at the futures market and looking at the ratio between sell orders and buy orders, it's very low. That's an indication which is positive for the stock market as well. It's not too low. If we're looking at this area here, guys, it was way too low, and that was a big issue. So if the put to call options ratio is too low, it gives us an indication that the market's overreached, because it just basically says there's so many buyers and they're all in a massive amount of profit that they're likely to start to cash in. That's what basically it's indicating, which is a good thing. You know, we want people to be in profit, so it definitely is a good thing. But nonetheless, it's really good that it's higher now, but still extremely, extremely low. That's another bias and indication towards upward price movement for the NASDAQ. Now, guys, we said the NASDAQ was going to be extremely interesting. And by the looks of it, it is indeed extremely interesting. Let's go to today's price movement. Let's look at the NASDAQ, guys. NASDAQ still extremely high, very high. It's holding on to gains so far. Not really seen a retracement. Almost 0.5% higher since the announcement, guys. Almost 0.5% higher since the announcement. If we look at the price movement of the day so far, I'll add my separators in. There we go. If we're looking at the day's price movement, so from start to finish, so far we rose again just under 0.5%. And if we're looking at the retracement also being included, we're looking at still being up 0.40%. So that's really interesting, guys. What you can do, if you've not already entered into that trade, you can switch over to really small time frames like so, and potentially looking at scaling in. So, you know, if it retraces, let's say this whole candlestick, and especially if it takes a very long time to retrace to that level, That's one candlestick, it rose that specific amount. But if it's going to take 5, 6, 7 candlesticks to decline that amount, it gives us another indication that buyers are really controlling and holding on to control the market, regardless of the decline. Now, based on this, if we're going to get a breakout of 61%, so 61% of the retracement being regained, then we have an indication there for a potential buy. If we get a breakout here, we have another indication there. Some traders may look to open both. Traders may look to scale in. There's a difference there of 0.07%, and they can continue that pattern. So instead of 0.07, we can go to 0.08. So basically, we're looking at a buy there. And then we'll look at 0.09. So we continue to buy. This time we buy here. And then we'll look at 0.010 and so on and so forth. Keep in mind though, if it continues to increase, it will retrace. So don't open too many trades and overexpose yourself without knowing the risks of that. So these are signals in regards to the NASDAQ, guys. Like I said at the very beginning, in terms of the NASDAQ and a smaller time frame, we very clearly are trading here above the 200 bar simple moving average, which is a very key indication. The simple moving average, very important for the 3-minute time frame, the 2 minutes, the 4 minutes and 5 minute time frame. Extremely important. And we can see we're trading above that level. So we had that bias from the very beginning. Now, does anybody have any questions before we continue? Gold to the moon, someone said. Let's look at gold. Is trading higher? Up and down price movement, trading higher. We're really trying to break above that ascending triangle pattern. If people, a lot of people here are saying buy gold. I've got another one here, buy gold. Another one, buy gold. A lot of people saying buy gold. Guys, if you're looking at gold increase in the value and you believe that's going to be the trend, because it's seen that volatility up and down price movement at the retracement, at these dips and these key levels, look at averaging down that methodology, which can be, of course, key. That's something, of course, you can look at. Somebody says it still hasn't broken a resistance. Now, there is some theories that if the resistance isn't broken, it's strengthening. Whereas when we look at institutional brokers, the more it hits the resistance level, the more comfortable they become buying at the resistance level. It's like, for example, if I say to you on Monday, buy this pen, is $1, and you buy it. Okay. On Tuesday, I come and I say, buy this pen, is $2. You're going to say to me, that's extremely expensive. I'm not willing to buy at such a high price. No. That's how resistance levels are formed. It's all based on psychology and sentiment within the market, the sentiment of these institutions, fund managers, brokers, and so on and so forth. So you say no. Next day I come again. Do you want to buy at $2? You say no. And you keep on doing this every single day. You, of course, want to buy the pen. Okay? You want to buy it. So if I keep saying to you $2, your sentiment towards that $2 starts to change. You start to become more comfortable with $2. It's like, for example, when we buy food, inflation over the past 5 years has been massively high. We still buy the food, okay? Because it's gradually increasing. We become comfortable with that price and we continue to buy it. The same thing happens if we keep re-hitting that resistant level. Large traders, which are driving the market, institutional traders, they've become comfortable with the resistant level. It's no longer having a psychological edge over them, and they continue to buy. And guys, by the way, I'll just point out, as I'm saying that, the price is increasing value. So, it hasn't, this gentleman here has said, it hasn't broken the resistant level. No, it hasn't, but it's in the process of attempting to do so. So trading, we have to be patient. We have to be patient, guys. I was thinking about swing trading gold to sell. Let's look at that in a moment. If gold doesn't break the resistance, likely it would dip to the break of the ascending triangle. Of course, that is a possibility. We looked at, I don't know if you've just joined, but we actually looked at that together because there is an ascending triangle very clearly here, ladies and gentlemen. Now, it's not just about failing to break that resistance level. We have to have renewed momentum downwards. So if we're going to suddenly see very high momentum downwards gain and we're going to break below the 200 bar simple moving average or break below this candlestick, which is very clearly the price rejection candlestick. Very clearly there was many pending orders there, and that's why we had to shoot upwards thereafter. If we're going to break below that, then we can look at a potential correction. Now, if we're going to look at swing trading downwards, the only thing we have to be cautious about is as it continues to decline to these two, in between these two levels here. Okay, if we're going to decline in between these two levels, these are the support levels in terms of indications from our technical analysis. So from the 75 bar exponential moving average and also the 100 bar simple moving average. If we look at here, we decline back to that level. That was a level it rebounded. Let's go back to the time before that. Here, well, we actually saw a downward price movement here. But, well, even if we look at downward price movement, you can see it's bouncing off these levels. These are very key levels. Look at here. Bounce, 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 bounce. They're rebounding, ladies and gentlemen, off these levels. So if we are going to swing it downwards, you may look at opening, should we say, 4 trades simultaneously and having, for example, take profit on the first trade of, again, just an example. Let's look at the distance and then I can show you just an example. If we're looking at 0.70% decline, the first trade having a take profit of 0.10, second trade 0.30, third trade 0.50, the last trade 0.70 in terms of the take profit. So then you are also spreading the risk against, because you're trading against the trend in the longer term in terms of swinging downwards. By opening multiple trades with multiple exits, you're spreading the risk, and at least ideally 2 of them will hit their take profit. Even if it doesn't see such a strong price movement and it moves against you, and then on 2 trades it hits the stop loss, it's not an issue because we've had 2 profitable trades, 2 losing trades. But at the moment, we don't yet have any indication of this just yet. We have to keep monitoring. It is possible we may see that. Not the case just yet, because it's not just about the Core PCE Price Index, guys. We've had more tariffs over the past few days as well. Yesterday, we had tariffs 100% on pharmaceuticals. We had 25% on trucks. On certain furniture, we had 50%. On certain furniture, we had 30%. Increases the risk to the economy. Geopolitics, big escalations there as well. So there is a lot of factors which is keeping gold higher. So, of course, we have to be cautious about trading against the current trend. I've got some questions here. I'll keep on answering them just a moment. So somebody here, and I say somebody, I apologize that I say somebody. I just don't want to announce your name. He's saying if we can look at the support, this specific support level. So let's have a look at it. Okay, so that's the support level he's looking at. I removed it. Bear with me. Yeah, so it's a very similar level to what we were looking at. Very similar level. So guys, everybody watching, this is very similar to what we were looking at. So yes, very clear support level. Very clear support level. I've got some more questions here. Somebody says this is all very confusing because he's a new she's a new trader. If there's some other educational material, she says that it's more easily people can learn from. Of course, let me share our website. Here we go. HFM is also celebrating 15 years, ladies and gentlemen. Here we go. So if we go to tools and education and we look at online trading courses, we have 4 courses, ladies and gentlemen, 4 courses. And they've got a lot of different topics, especially here we're on the beginner course. They're a great topic for beginner traders. What are CFDs? How trading works? The spread, lots, pips, orders, trading methodologies, technical analysis, fundamental analysis. And they're all videos, short videos. So very easy to follow, user-friendly. We also have webinars, guys, that you can get access to for free as well. Especially beginners, for example, on this webinar here, Beginner's Guide to Starting Trading. That is a great webinar, I think, for like this lady that has never traded before, really wants somebody to give her some guidance. Somebody here says again, USD JPY. I apologize, somebody mentioned that before and we didn't look at it. Let's go to a 2-hour time frame. We'll make this the last asset we're looking at. We definitely, bear with me, let's go. We've got a 2-hour time frame here. There we go. And we want USD JPY. Definitely trading above both at a very clear buy area on the MACD. We have here, though, almost divergence on the RSI, so that's a slight issue there. And we also have the same on the MACD. So guys, here we have an indication for the time being that the price is going to decline, but in the longer term, it will continue to increase. This, though, will massively also depend on the Bank of Japan, because they were expected to increase interest rates on quite a few occasions. They didn't live up to expectations. They started the year because of those interest rate hikes, which were projected as the best performing currency all the way up to Easter. After that, though, because they didn't live up to expectations, should we say, it no longer is one of the best performing currencies. So it also depends massively on the Bank of Japan. If they start to give us clear indications that they will hike, then the trend here can significantly change. Somebody here says, just joined. What's the update on gold? So we've spoken about, let's go to a smaller time frame. Just to end the conclusion, because we're coming to the end of the session, we spoke about gold, mainly the bullish buys. We looked at 2 entry points. Both of them are in a profit, to be honest with you, at the moment. We also mentioned massively the MACD. Again, the bullish bias, the advantage of trading at the discounted purchase price. Again, really good entry level there. You said gold. I also mentioned the NASDAQ as well. Best performing currency of the day, guys, just to end today's session. Best performing currency, the pound, euro, Swiss franc. Worst performing US dollar, New Zealand dollar, Australian dollar, Canadian dollar. So all the dollars. So guys, let's end today's session. Hopefully it was educational and informative. The Core PCE Price Index didn't come in higher or lower than expected. Came in as expected. But the good thing is that it's lower than the previous months, which is a slight positive for the market. We can see shareholders are already pouncing on that. We can see this uptick on the NASDAQ. Not quite enough for gold. Gold up and down price movement. I think the NASDAQ and shareholders are more trigger happy at the moment. But of course, we need to keep an eye on this because the US session will open in exactly half an hour. So let's end today's session. Hopefully it was educational and informative. Enjoy the rest of your day. Enjoy your weekend. Of course, don't forget, we offer amazing support here at HFM. We have webinars, we have ebooks, we have guides, we have online trading courses as well, all offered to you for free. And of course, our support team is available to always help you instantly, including through live chat, WhatsApp, on the phone. If some people prefer email, that's also an option as well. So that's